Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, if we start talking about the general markets, both the S&P 500, the US markets, and the South African market seem to be at sort of, I don't know if they're at an inflection point, but at a fairly interesting juncture at this stage.
Yeah, they are. We've had a very strong start to the year, and we've seen that particularly the S&P 500 has gained 25% off its December lows to the recent peak. So it's been a hugely strong start to the year. But it does look as if it's now starting to run out of steam, and you can see the pattern on that chart there looks as if it's beginning to almost roll over. And I identified last week and the week before, in fact, the possibility that we could be starting to see the right shoulder of a head and shoulders pattern begin to form here. And it's really looking more and more like that is the case. You can see that right shoulder formed quite clearly over there. The fact that the underside of the 50-day moving average there has proven to be quite stiff resistance. And the price has moved down to this lateral support at 2,800, which is where the neckline of that head and shoulders pattern comes in. Now, if it were to start breaking down below that neckline, then it actually could open further weakness. And on a pure technical analysis basis, it projects down to a measured target of 2,650. So it's a possibility if we break down below 2,800 that it could go there. It's not looking all that fantastic right now. As I say, it looks like it's rolling over.
Yeah, it's not quite as peaky as the South African market though, although I think we're being supported somewhat in the incredibly weak rand, which is now at 1460 odd. Yeah. Sell in May and go away was the adage that we should have adhered to this month, I guess.
Yes, and that's right. I mean, every year, sell in May and go away, the whole saying comes up, and then there's all sorts of people on Twitter that will disprove it and dig out all sorts of historical patterns to prove that May is not actually the weakest month of the year. But anyway, this year, it certainly seems like selling in May and going away was the right thing to do, because we've had a very weak month of May. You can see on the top 40 index there how it's been pretty much one-way traffic down since the beginning of May. We broke down below the bottom of that rising channel pattern that we'd spotted many times on the show. And last week I said that the 49,000 level was quite critical and we need to hold above that. We didn't hold above it. We've actually gone down below that, and we now are below the 200-day moving average as well on this top 40 index. So it's not looking fantastic, and that 49,000 area now becomes fairly stiff resistance for the market.
Okay, so quite a lot to contend with there, and I suppose last week you were talking about technical damage, but let's talk about individual stocks. Last week you flagged Astral as a potential stock to watch, but then they came out with news today that they've got issues with their Standerton operations. They're going to have to take a bit of a hit there, 82 million rand. Are you glad that you didn't enter into this trade?
Yeah, so last week we spoke about Astral Foods, and I always like to try and keep this show honest. We've always said we would do over the last 10 years that we've doing Traders Corner. When we get it right, we like to crow about that, but also when we get it wrong, we also need to be honest about that. And it does seem as if this Astral Foods has not worked out. And like you say, fortunately, we didn't actually enter a trade in it. The reason I haven't entered a trade in the stock is because it never actually gave a reversal. What I said last week was that I would look for a possible reversal up through this area around about 175, 180. Yeah. And if it gave a clear reversal and then started to trade above the high of the prior day's high, then we would look to go long. Now, that actually hasn't happened. You can see every single day since last week, it's made a lower high every single day. So there's never been an opportunity to enter the stock based on that. So this morning when I got the alert on my phone to say that Astral was down 10%, which it briefly was early this morning, I thought, phew, we really did dodge a bullet over there. But you're right. So what's happened is that there's this 85 million rand cost that's now come into their financials due to having to deal with a water scarcity issue or some sort of problem with water at their Standerton operation. And then the other thing is that the maize price has been ticking higher. And actually, if you look at the maize price and you look at the Astral share price, you'll find that the two very often are inversely correlated. Yes. So the fact that the maize price has been kicking a bit higher has been negative for Astral. So I think for now we're going to just rather walk away from this and not consider going into a trade on this stock now. We've got two other trades we're going to look at this week.
Yeah, okay, well, let's talk about those, because one of them is, it's sort of the second bite at the Bidvest cherry. Yeah. Having been flushed out of Bidvest and losing a bit of money on the former trade, why are you going back there?
Yes, so we were flushed out, you're right. At the beginning of May, we looked at it and at that stage said it was breaking higher. Just before the elections, it was looking good and looked like it might pop higher. And if there was a sort of a Ramaphoria round two in the domestic area of the market, then it could see the share propel further to the upside. And that did not happen. So we were stopped out. And in fact, there's a lesson here. I mean, the fact that we were stopped out, we lost a little bit of money when it was up here, and it stopped us out at 214 Rand, thereabouts. You can see it's now subsequently fallen another 20 Rand, more than 20 Rand since then. So being stopped out in this case was actually a blessing, and we can be glad we were stopped out.
Yeah.
And yes, it gives us the opportunity to now have another bite at the cherry here. So looking at it, and what I like about the stock is obviously it has been under pressure. Part of the reason why it's been under pressure is because South Africa's weighting in the MSCI emerging markets basket has been reduced. And as a consequence, a lot of our domestic stocks have had their weightings revised downwards, and one of those is Bidvest. The total number that we see bandied about is about $1.6 billion of passive outflows that had needed to flow out of the JSE as a result of this reweighting. And Bidvest has been a victim of that, and you can see the share price has come under quite a lot of pressure over the last 2 weeks. Now, that reweighting takes effect tonight on the 28th of May at the close of market. So my thinking here is that a lot of this reweighting selling would have already now occurred over the last week or two. And what's interesting to note is that over the last 3 trading days, there actually is a Morningstar reversal pattern that is formed on your 3 candlesticks patterns there. So it's where you get a down candle or black candle in the case here, and you get a doji, which is that looks like a little cross or a little plus sign, and then you get the green candle that follows. So that indicates that over 3 days now you've seen a shift in the dynamic of the power balance moving away from the sellers in favor of the buyers.
Yeah.
So based on that, I've gone long because that reversal also happens at quite a key support area at 190 Rand per share. So I've gone long at 195 today with a stop loss at 190, and I'm looking for a move up here to the underside of the underside of the 50-day moving average, which is that red line, and that'll be at about 206 Rand.
Yeah. I mean, the other worry, though, is the Rand, because Bidvest is a SA Inc. Rand-sensitive share, and it doesn't benefit from a weaker Rand. It tends to, it's to its detriment.
Yes.
Is that something that you're possibly keeping a nervous eye on?
Slightly, because now that the Rand is weakening, it started to weaken after we've entered this trade, and it seems like it's started to weaken after David Mabuza has now thrown his hat back into the ring for the deputy presidency, and the markets don't seem to be too happy about that. So we will watch that. That's obviously it's a factor that's come into play subsequent to us entering the trade. As always, we've got a stop loss in place. Our risk is quite small on this trade. So if we're wrong, we'll lose what's going to be 1% of our portfolio.
Yeah, well, take us through the mechanics of the trade, Garth.
All right, so we're long at 195 Rand. We're stopping out at 190 if it gets there. The risk per share, therefore, is 5 Rand. I'm risking only 1% of our capital here. So we've got 155,000 Rand in our local portfolio. So 1% of that is 1,550 Rand. That's what I'm willing to lose if I'm wrong on this trade. So we take that capital risk of 1,550, we divide it by 5 Rand per share, which is our risk per share. That gives us 310 CFDs that we can buy. So that's what I've bought for the portfolio this week. The target is 206 Rand, as I mentioned, and that means that our risk to reward ratio here is 1 to 2.2.
Okay. So that's one of the trades. And is it 1% of the portfolio because you've entered into another trade this week?
It is. And also because the 2 trades are similar in a sense that they're both shares that have been absolutely pummeled of late. And we're kind of adopting the same strategy on 2 separate stocks here. So hence why I'm sort of splitting the risk between the 2 trades and not going big into either one of them.
Yeah, look, I have to say Netcare is a lot more unloved than Bidvest, although Bidvest has had a bit of a pounding recently. But Netcare's fall has been quite extreme, and there's been a whole bunch of issues here, not least of which a leveraged position, it seems, that the CEO had, which prompted a forced sale of quite a lot of stock.
Yes, that's right. So the share price has come under a huge amount of pressure this month, and particularly last week it was under a huge amount of pressure. You can see that volume spike there that occurred last week. And what that is caused by was the fact that, as you said, the CEO, Richard Friedland, was a forced seller of 200 million rands worth of Netcare shares into the market. There was a SENS announcement to that effect last week. And it stems from a position which, I mean, I can only assume it's a leveraged position in the stock. It says that it relates to the acquisition of share options and whatnot. But, I mean, to cut through all the noise, what it really meant is there was leverage here. He needed to sell shares in order to run down the leverage to get back into sort of a better place, as it were, with his financiers. And hence you saw this big drop-off in the share price. Now, that's really what caused that big volume spike last week. And that is now out the way. That's in the rearview mirror. So my feeling here is that the stock has probably overreacted. It's overshot to the downside. We are beginning to see some stability emerge now around these levels. And my sense is that with that selling pressure out of the way, you could actually see a bit of a bounce in the share price. And that's why we're going long of this week, looking for a bit of a move to the upside.
Before we talk about how you've entered the trade, Garth, just there was a bit of confusion as to whether or not the share drop prompted the forced share sales or vice versa, because it all seemed to... It's hard. It was a bit of a chicken and egg situation at Netcare.
Yeah,
does that concern you slightly?
Well, it seemed that the share price began to fall. I mean, when it made this breakdown in the beginning of May, that breakdown below 23.50 Rand was quite a bearish technical break. Okay. And you can see from then the floodgates started to open. And I would imagine that then as the price began to fall, so he was sort of almost margin called in a sense of then being forced to sell into a falling market. Yeah. And that then exacerbates the pressure to the downside.
Yeah. Okay, well, talk us through this trade.
All right, so we've gone long at 18.45 Rand here with a stop loss at 17.90 Rand. The risk per share, therefore, is 55 cents. And we again going to risk 1% of our capital on this trade, which is 1,550 Rand here. So again, we take the capital risk, 1,550, and we divide it by 55 cents per share. That'll give us our ability to calculate our position size, and it's 2,818 CFDs is what we're buying here. The target, as I said, is 20 Rand, and therefore our risk to reward ratio on this is 1 to 2.8.
Yeah. Not a bad risk to reward ratio.
Yeah, it's a good risk to reward ratio. And I mean, I think that 20 Rand price target is also conservative. You could actually find that it even goes beyond that if we do see a little bit further relief in the share price once all of this selling pressure has abated.
Yeah. Okay, guys, so talk us through the portfolios, because it's been quite busy, but not necessarily profitable, unfortunately.
No, it's not. So, I mean, what I'm showing here on the South African portfolio is only the 2 open positions that we have at the moment. These are the ones that we've discussed on the show today. That's Bidvest and Netcare. We're still sitting up 3.5% odd for the year to date here, so slow going. And then our offshore portfolio, we haven't done anything here too much recently, still sitting with a loss of 2% for the year to date here at the half year stage on the offshore portfolio. And I really have not been very active this year on the offshore portfolio, which I attribute part of the reason why we're doing so poorly there to my general lack of activity on the offshore portfolio. Well, we've been much more active on the local portfolio this year.
Well, you have 6 months in which to redeem yourself.
Indeed. 6 months and the clock is ticking.
Indeed. Garth, so we'll leave it there. Just a reminder that viewers can get a weekly alert should they choose to subscribe.
Yes, if you go to traderscorner.co.za and you go to the middle of the page, you'll see there's a link there for a free weekly email. Click on on that and you can enter your details, and we'll send you an email every Tuesday at lunchtime detailing exactly what is coming up on this show for the week ahead.
Great. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.